It's 2024 and you don't even know these 7 ways of investment, really? Hi everybody, I am Selena and you are in Investify. And you? And this is Mr. Milk. Today, I would like to speak to you about 7 ways of investing your cash. Instead of letting your money sit in the bank, earning the fix of a variable interest rate, you can actually put it into a better use. And today, I would like to introduce you 7 different instruments. These are equity, bonds, mutual funds, ETF, alternative investment, commodities, and CFDs. And the last one, obviously, is what we are trading on this platform. And I would like to give you a bit more details on how you could invest in CFDs. Number 1, equity. By buying share by a piece of equity, it means you are owning a piece of the company that you like. This would give you some ownership of the dividend when the company comes to the distributing date. Equity is actually considered with high volatility, high risk as well, as you get a higher potential of getting a great return. So equity is really the place you should be if you have a high conviction in a company that it's going to do well. You like the management team, you like the product market fit, you like the story that the company is telling you. That's where and when you should invest in equity. The second form of investment is bond. It's considered a safer form of investment. So you are a lender to a particular company or a government. Even if, say, you buy a piece of bond, there is a different seniority in that which is linked to different risk level. So say if you buy a piece of treasury bond, this essentially is lending money to the US government, which is normally considered to be at lower risk. Think of bonds as the more reserved siblings of stocks. Basically, buying a bond means lending money to an entity, like a corporation or government, which promises to pay you back with interest. It's generally safer than stocks, but with lower potential returns. Let's go with the number 3. Mutual fund. Mutual fund is a form of actively investment fund. Usually there will be a portfolio manager. This is where things get collaborative. Your money gets pooled with other investors' funds to buy a diversified portfolio managed by a professional. It's an excellent way to spread out risk and get into different types of investments under one roof. The catch: fees for management and performance, so keep an eye on it. Next form of investment is neutral funds. Neutral funds, commonly known as ETF, it's similar to mutual funds in this sense of its support group of investment. Imagine mutual funds that you can buy and sell like stocks of the exchange. ETFs offer flexibility, lower cost, and easy way to diversify. They can track everything from the overall market to a specific sector like technology or even commodities like gold. In the number 5, we have alternative investment. We are stepping off the beaten path here. Real estate, art, private equity, and hedge funds fall into this category. These can be lucrative but also require more knowledge, patience, and often a higher entry cost. However, they can be a hedge against market volatility and inflation. There are many ways that you can invest through this type of investment, as the name suggests. One common one is real estate. You can either actually own the physical asset, you can own the real estate on the houses. You can invest through REITs. These are real estate investment trusts and then you can buy shares in this trust. They are more liquid than actually going out and buying the whole building. The next form is commodity. Trading in the raw material that power the world, like oil, gold, and agricultural products, can be rewarding. This market can be volatile, influenced by everything from the weather patterns to geopolitical tensions. It's all about timing and understanding global markets. And the last former investment is CFDs, contracts for difference. These are complex financial instruments that allow you to speculate on the price movement of assets without actually owning the asset. It's high risk, high reward strategy that enables you to take positions on both rising and falling markets. Ideal for experienced traders who are comfortable with significant risk. Each of these options present a unique blend of risk and potential return. Your job as an investor is to assess which mix align your financial goals, risk tolerance, and investment timeline. It's not just about throwing your money into the market, it's about strategizing and making informed decisions to build your wealth over time. So there you are. Is slightly deeper look into making your money work harder for you. Remember, investing wisely requires research, patience, and sometimes a bit of nerve. But with the right approach, you could see your financial dreams start to take shape. Until the next time, happy investing and may your financial journey be prosperous.
We are Investify and follow us for more. Invest